Hey, what's going on, guys? In today's video, I'm going to be talking about something that I probably should have done when I first created my YouTube channel, when I was starting out investing, just talking about investing. I really should have opened up a Roth IRA account on the M1 Finance application. So in this video here today, I'm going to be doing just that. Now, the main things you can expect to learn to get out of this video here is, number one, I'm going to be talking about what a Roth IRA is, kind of how it works. Number two, I'm going to be talking about why I love investing in a Roth IRA, why I feel like moving forward, contributing my money into a Roth IRA is going to propel me to financial success in the future. The third thing I'm going to be talking about is kind of the pros and cons that come along with investing in a Roth IRA. And then the fourth thing that I'm going to be covering is my Roth IRA strategy. So I'm going to be telling you the exact funds that are going to be funding my Roth IRA account. And then number five, I'm going to be walking you through the setup and what it's going to look like within the M1 Finance application. So it's a lot to take in. So let's just get right down to business. Now, like I said, the first thing you're going to want to learn is what exactly is a Roth IRA. Well, a Roth IRA is an individual retirement account where essentially the money that you're putting in is pre-taxed, so it already is being taxed when you put it in. That way, when you withdraw the money, you aren't taxed on it later. Now, the earliest you can withdraw money using a Roth IRA is 59 and a half, because that's when you can declare that you're retired and actually get access to the funds. There are a few ways that Roth IRAs are limited, okay? So the reason why is because if you make too much money, you actually cannot contribute into a Roth IRA. So for 2020, if you make more than $139,000, you're not gonna be able to contribute into your Roth IRA as it stands. For married couples, that number gets bumped up to $206,000 combined. When it comes to how much you can contribute into your IRA, you actually are limited by year how much you can put in. So for 2020, you can contribute up to $6,000. And if you're over the age of 50, they're allowing you to contribute up to $7,000 just to catch up a little bit. Now, $1,000 isn't going to be that much in the short term, but if you were able to consistently do that even above the age of 50, it's really going to make a big difference in your portfolio if you're planning on retiring later than 59 and a half. And one thing to note is that almost all brokerages and investment firms are going to be offering a Roth IRA. So you have many of different options out there. You don't have to be tailored to M1 Finance just because I am. I just think it's the most intuitive and the easiest for me to use. So that's why I'm going ahead and opening one on M1 Finance. Now, actually, just before I get into the cons, the second thing I want to cover is actually why I love investing using a Roth IRA. And the reason why I personally love it is because right now I'm 23 years old. I'm really, really young. I'm not going to get any younger. And the thing about being young and I'm just starting out in the workforce is that my tax bracket is one of the lowest that it's ever going to be. And the reason is because I expect to be making a lot more money as I progress on, as I go through my career. I mean, it kind of just makes sense. As you get older, as you move positions, as you continue progressing in your career, you're obviously going to be paid more. Your services are going to be more valuable for companies. And obviously with experience comes a higher paycheck. So the reason why it's so great for me right now, because I'm taxed at the lowest percentage that I might ever be taxed in my entire life. So it's a really great time to take advantage of this as much as I possibly can and contribute the maximum amount every single year. Now, getting into the third thing I want to talk about, the three main reasons why, people are hesitant to invest using a Roth IRA. The three main cons that come along with it is that, well, number one, there are no tax write-offs. So for a lot of different types of investing, you can actually write it off in your taxes, but this is all taxed. You're going to have to be paying that no matter which way you try and get around it. It's not really possible to get around the taxing from a Roth IRA account. Now, the second thing is that if you decide or something comes up, you have a medical emergency, you need to get access to this funds, you need to pull it from your Roth IRA, you're actually going to be penalized on that. And I believe the penalty for that right now is around 10% of the value that you take out, as well as you're going to be paying different amounts of taxes that come along with just taking that money out of the Roth IRA account. So really, the best way that you can be investing using a Roth IRA is making sure that your money can sit there, it can stay there and be stable for a long period of time, because this is where compounding interest comes in huge. You start off, $6,000 every single year, and then eventually your portfolio starts working for itself, and it's going to be so much easier to make money within your Roth IRA account going forward. So I just want to share share with you guys a little segment from the bankrate.com website. All of the links that I talk about in this video will be in the description. So if you want to check them out, do a little bit of research for yourself, then you can go ahead down in the description, click on the links. But the first thing I'm going to be covering is bankrate.com because I want to go over the Roth Ira calculator. All right, so now that we've navigated ourselves to the Bankrate website, what I'm going to go over is just structuring the account here. So the starting balance is going to be $0, and I'm going to keep it like that. I'm not going to roll any money into this. And what I'm going to look to do here is make an annual contribution. Now you can do up to $6,000, but let's just be conservative for numbers here and say we're investing $5,000 every single year. My current age right now is 23 years old, and the age of retirement, you can do 59 and a half. What I'm going to say is a 65, just because that's pretty much what everybody really expects. And I feel like I'm gonna be working well past 59 and a half anyways. And then the expected rate of return, I'm gonna go ahead and do 7%. That's what you can expect from the S&P 500, which is primarily what I'm gonna be investing in, is pretty big ETFs for this portfolio. A little spoiler there before I talk about the funds in the portfolio itself. So if I go ahead and calculate that, you can see that at retirement, my IRA balance could be worth $1,233,882. Now, it's pretty interesting here. If you look down at this little chart here, if I had just put that in a taxable savings account, it would be $759,490. Now, I would expect, because the rates have changed so significantly, that this number should be a lot lower, but right now, that is what it's projecting from this website here. This is a really great resource. I love doing a bunch of different calculations on the Bankrate website. You can see my total contribution to get that $1.23 million is only $210,000. That really shows the compound interest effect. Just to give you guys an idea, just starting young is the most important thing. So if you're in your 20s, if you're in your teens, your late teens, and you're just getting into investing, IRAs might be the best choice for you, especially if you don't know much about investing, because there is a lot of great features to investing with a Roth IRA, especially if you're going to be leaving your money there. So let's say you just started at 18. I'm going to go ahead and calculate that. You'd have close to $2 million. You'd have $1.76 million from this alone, which is really, really great things to see. I wish I had started even earlier. And then obviously that $5,000 could be bumped up to $6,000 annually. And I feel like it's only going to climb from there. So if you guys want to play around with this, the link will be in the description as well. So listen, if you guys are aware with my investment strategy, if you've watched any videos on my channel, you know that I am a long-term dividend investor, and that's not going to really stray in my Roth IRA all that much. What I'm going to be looking to do is make the simplest portfolio that I possibly can. And the way that I'm going to be doing that is taking advantage of what's known as the bogglehead method, which is essentially just creating a 3-fund portfolio that is going to be so easy for me to manage. I barely have to look into it. And really it categorizes itself of 3 main categories. Now that is bonds, stocks, and international stocks as well. What I'm going to be doing is starting out heavily in the investment stock section, because I'm young. As you're younger, general rule of thumb is that you want to invest more heavily into stocks because you have a higher risk tolerance. You can make up for lost grounds if you need to. And then bonds are a little bit more stable. I'll have a lower proportion of my bonds in my portfolio as well. And then I'll mix in those international stocks. They'll be a little bit higher than the bonds. But what I think I'm going to end up doing is 70% stocks, about 20% of those international stocks, and then 10% bonds for now. And that's going to change as I approach retirement. As I get older, those numbers are going to change. But this is the best method because I think personally for me, it's the most hands-off. I don't really need to worry about it. It's a proven method. You can look up bogglehead method. You can look up the different types of indexes you could invest in. But for me, the 3 main ones that I'm going to be covering is VTI, which is the total stock market index essentially. And then it's going to also be BND, which is another Vanguard bond holding security there. So that is a really great option. And then for the international stocks, I'll be going with another Vanguard one, which is VXUS. So those are the exact ones and the proportions that I'm going to be setting up my portfolio with if you were interested in finding out that information. Now, heading over to Investopedia.com, link will be in the description. I just like to look at the general information for what I'm investing in here as well, so you guys can get a clearer explanation for the types of funds that I am investing in. So the Vanguard Total Stock Market ETF is a well-diversified exchange-traded fund that holds over 3,500 stocks. So this is very diversified, exactly what you want to look for in terms of mitigating the risk that you have of investing. Now, the next thing is the ETF's top sector is technology with a 21.2% weighting, while Microsoft, Apple, and Amazon are its top 3 holdings, making 12.6% of this ETF. So it is heavy in the sector of the technology realm, but honestly, that is what's keeping us afloat right now. If you watch the stock market, these are the industries that are killing it, and I don't see any slowed growth or progression from them in the near future. So I want to make sure that I get in on that as well. Now, the best thing about this is that it has a low expense ratio of 0.03%, and it tracks the broader stock market very closely. So when you invest in something like this, essentially you're investing in the stock market as a whole. And this is the type of thing where you invest in some years, it's going to go up, 12+%. Some years it'll drop, 8, it just fluctuates a little bit, but on average, you should expect to see somewhere around a 7% return. So that's what I'm looking for right here in this. And I think it was the simplest way that I would be structuring the portfolio, and it's the one that's going to be weighted the most for sure. So now, hopping into the M1 Finance app, what I'm going to do is jump in, and I'm actually going to go and create an account here. Click on add an account, and I'm going to go with a retirement account. Now, I want to set up the Roth Ira, so I'm going to go ahead, click on that, and right here, I'm entering my social security number. So obviously, I'm going to skip ahead from this just for security purposes. So you can see I'm on the next little section here, and basically it just talks about the terms of use, the privacy policy, all the things about M1 Finance, and it confirms the type of account that I am setting up here. So I'm going to go ahead, click on confirm, and it's going to submit. So just like that, it's super easy. That's exactly how you sign up for it using the M1 Finance app. Now, just to show you how intuitive the M1 Finance portfolio application is, I'm gonna go ahead and structure out the portfolio right before your own very eyes. So I'm gonna add to the portfolio. I'm gonna remove that so there's no slices here. This is a completely new pie is what they call it in the M1 Finance app. So if I go ahead and I wanna start adding these funds, obviously I gotta go over to the fund section. So I'm gonna go with VTI, which just so happens to be right there, and you can click into it and you can click on add pie. So VTI has been added. That is a slice of my pie. Next thing that I talked about was VXUS, and I'm going to add that to the pie as well. And then finally, the third thing I talked about was BND, and go ahead and add that to the pie as well. So now I can go ahead, click done. It's as simple as that, and you can see it breaks it up pretty evenly right off the bat, but obviously the bonds are what I have the lowest percentage on. So let me just adjust this all the way down to 10%. And VXUS, I wanted that at 20%. And the remaining 70% is going to go into VTI. So that is exactly how I am structuring this out right here. Sorry, it just had a little glitch there. That is exactly how I'm structuring out this portfolio. And I'm gonna go ahead, click save in the top right, and now I can finally start adding money into this account. What I'm gonna do here is set up a recurring investment. So essentially, without me even thinking about it, money is gonna be taken from my bank account, invested automatically into here, and it's going to prove some great success in the long term. So if you guys had any questions, make sure you leave it in the comment section down below. Thank you so much for checking out this video. Have a great day.